Everyone, welcome to Pinopoli Consultants Technical Analysis Education Program. My name is Ashutosh Gidankar and I am your trainer. Today we are going to learn about gap and gap fill. Gap is basically defined as the change in price between the close and the open of two consecutive days. We are going to consider four types of gap: a full gap up, a full gap down, a partial gap up and a partial gap down. Out of which we are going to cover only two, and the most important, a full gap up and full gap down. Let us consider an example of a full gap up and how a gap occurs in the market. This is a one-day graph in which we can see the market is moving in the upward direction. For the day 1, the market is on buy. For the day 2, the market is on buy. The day 3, the market is on buy. The day 4, the price of the open is much more higher than the price of the previous day high. In these circumstances, the market creates a gap and is normally called as a gap up. The same scenario will happen in a gap down situation where the market is going in the downward direction. Here, the current day open is much more lower than the previous day low. That also creates a gap which is considered to be a gap down. Now gaps are basically very important for trading as they are very simple to see in the charts, and gap also acts as support and resistance. Now when we consider the market is going in the uptrend, the gap which is created in the upward direction will act as a support, and when the gap is created in the downward direction will act as a resistance. Say for example, the stock of Pinopoli Consultant is trading at a price of 100 rupees at a given day. The next day the market opens at 120 rupees. Here we can see the market has jumped from the previous day high of 100 and opened at 120 the next day, which means the market has jumped in a price of 20 rupees in a differential. This also tells that the buyers are much more excited for the stock as they think that the potential of the stock to go up is much more higher, and thus this price creates a gap which also acts as a support. Now whenever we see this kind of situation, it's very logical to play a buy in this particular stock. The basic entry point for this stock would be to go on a buy at this particular day, and the stop loss for this trade would be at this level. The same situation will happen if the stock is on sell. When the market is in the downward direction, the gap will act as a resistance. So your stop loss for the sell call would be here, and the selling would take place from here. So we also have a basic strategy for buy and sell. This concludes our gap for this session. If you find this video interesting and would like to subscribe for more videos, please leave a comment. Thank you.